All right, let's dive into one of the most classic battles on the stock market, the burger wars. In one corner, you've got the undisputed global champion, the empire itself, McDonald's. And in the other, the trendy, fast-growing upstart that has absolutely taken the world by storm, Shake Shack.
So, who actually wins this war when you look at it from an investor's point of view? Is it the massive, stable giant, or is it the nimble, high growth challenger? Well, that's the big question we're going to break down right now. On the surface, they both sell burgers and fries, right? But they are playing two completely different games. Over on the left, you've got McDonald's. It's all about value, speed, and consistency. It's for families, it's quick, it's easy. Then on the right, you have Shake Shack. That's a premium, fine casual experience. It's about quality, it's a lifestyle brand, and it's for people who are willing to pay a whole lot more for a better burger.
Okay, now this is where things get really fascinating. Because to understand these two companies, you have to look way past the menu. You have to uncover their real business models. And here it is. This is the secret sauce. You see, McDonald's isn't really in the burger business. They're in the real estate business. They're the landlord. With 95% of their stores franchised, they just sit back and collect high-margin rent and royalty checks. It insulates them from the day-to-day costs of, beef and potatoes. Shake Shack, though? They're the operator. They own most of their stores, which means they're on the front lines every single day, battling inflation and rising labor costs.
So, how does this huge difference in strategy actually play out when you look at the financials? Let's pull up the scorecard and check the stats on our two fighters.
Looking at revenue, you see two totally different stories. McDonald's is just this absolute behemoth, huge, steady, and mature. Shake Shack, on the other hand, is the speedster. It's more than doubled its revenue since 2020. But to put that in perspective, McDonald's increase in revenue in a single year is often bigger than Shake Shack's total revenue for the whole year. Just think about that.
And this chart? Wow. This shows you the true power of being the landlord. Look at this franchise gap. McDonald's has an insane 31.7% net margin because of those sweet, sweet franchise fees. Meanwhile, since Shake Shack has to pay for everything, the ingredients, the labor, the rent, its net margin is a razor-thin 0.8%. They're not even in the same universe.
So what does all this mean for cold, hard cash? Well, McDonald's is a certified cash cow. It's generating almost $7 billion in free cash flow. That's money it can give back to shareholders. Shake Shack, on the other hand, is a cash consumer. It's barely breaking even on cash flow because every single penny it earns has to be plowed right back into building more stores. And that brings us to the next big question for any investor. With these wildly different financial engines, how do you actually get paid as a shareholder? Okay, just a quick refresher so we're all on the same page. A dividend is simply when a company takes a piece of its profits and pays it out directly to shareholders, usually as cash every quarter. And here you see two totally opposite philosophies. McDonald's is what we call a dividend aristocrat. It's a reliable company that pays out billions directly to its shareholders, and it raises that dividend pretty much every year. Shake Shack is the reinvestor. It pays zero dividends. It's making a bet that putting all of its profits back into growth will create way more value for you in the long run than just sending you a check today.
Okay, we've looked at the business models, we've looked at the financials. Now it's time for the judge's decision. Let's see what the market, the ultimate judge, thinks about all this. This stock chart since 2020 tells a pretty clear story. McDonald's has delivered a steady, solid return. Shake Shack, on the other hand, has been incredibly volatile and, over this period, has actually lost investors' money. And the tough truth is, while neither of them beat the market, at least McDonald's gave you stability. Shake Shack just gave you a very wild ride downhill. So why all that volatility? Well, a huge piece of the puzzle is the price tag. Shake Shack trades at a price-to-earnings ratio of 88. Put simply, that means investors are willing to pay $88 for every single dollar of the company's current profit. That is a sky-high valuation that is priced for absolute perfection. It needs massive growth to even begin to justify it. Now compare that to McDonald's with a PE of 27. That's a much more reasonable price. You're not paying for some crazy hyper-growth story. You're paying a fair price for a stable, high-quality business. It's priced for safety. So let's break it down. What's the bull case for McDonald's? Well, it's pretty simple. It's recession-resistant. When times get tough, people go to McDonald's, and it's a machine for returning cash to shareholders.
The bear case? Well, you've got to worry about changing health trends, the fact that they're pretty much everywhere already, and a pretty big pile of debt.
And for Shake Shack, the bull case is incredibly exciting. They have a massive runway for global growth. They're just getting started. But the bear case is just as strong. The business is super sensitive to inflation, it could get crushed in a recession, and there's a huge risk that they won't be able to scale that special Shake Shack magic all over the world.
So here it is, the final tale of the tape. And as you can see, the numbers just lay it all out there. Market cap over $200 billion versus less than $4 billion. Net margins of almost 32% versus less than 1%. A PE of 27 versus 88. One pays a healthy dividend, the other pays nothing. I mean, the contrast could not be more stark.
So this all brings us to the final round. And the winner of this burger war, well, it's not that simple. It really all depends on one crucial thing. What kind of investor are you?
You really have to choose your fighter here. Are you the sleep well investor? Someone who wants low volatility, steady income, and a safe investment? Then McDonald's is definitely in your corner. Or are you the high-stakes investor? Someone with a high tolerance for risk who's chasing that story of explosive growth and potentially massive returns? Then Shake Shack is your bet.
So to sum it all up, each one is a champion in its own right. McDonald's is the undisputed winner when it comes to financials, efficiency, and just plain old safety. Shake Shack, no question, wins on the quality of its product and its incredible potential for future growth.
But if we have to make a call for the world we're living in right now, here's the final verdict. In an economy with high interest rates and stubborn inflation, that asset-light, cash-printing franchise model that McDonald's has perfected, well, historically, it just reigns supreme over the capital-heavy, inflation-sensitive model of an operator. And of course, just a friendly reminder, this is all for educational and entertainment purposes. It is not financial advice. All investing involves risk, so please be sure to do your own research and consult with a professional. Thanks for watching.